Hello, everyone. My name is Pedro Pacheco, and I am Research Vice President at Gartner, covering the area of automotive and smart mobility. Thank you very much for the opportunity to be here with you today. And I would like to, during the next 15 to 20 minutes, to cover the topic of EV market trends. So what kind of trends should we expect in the EV market in the coming few years? Before going into those, it's important to basically start by creating the helicopter view. The adoption of EVs, the market adoption of EVs, is split according to three main phases. The first one, early adoption. The second one, when the market takes over, goes into the next gear and heads towards mass adoption. And phase number three, when the widespread of EVs is already quite generalized, this will be when the industry starts tackling market niches and keeps on tackling new regulations. Now, what does each of these phases entails? So when I talk about early adoption, this is about EV launch frenzy. Automakers, launching many EVs on the market and trying to expand, the market coverage in terms of the models they put on the market. Second, plenty of incentives and regulations in place in order to push automakers to sell more and more EVs and also to make the acquisition enticing enough for consumers. There's a clear need for greater driving range, since range anxiety is the main objection to acquisition from a consumer perspective. So the technology is geared up towards achieving much better driving range. So obviously, performance and premium cars lead the way at bringing the latest and the greatest technology on the market that will then cascade to other segments. Charging network is still pretty precarious in the sense that not only there's not enough chargers, but they are located in spots that are not exactly, let's say, enticing from a perspective of customer needs. And at the same time, because the EV ecosystem is still at a very early stage, the user experience, so of, let's say, obviously EV drivers, is still pretty poor. Still many things to be done, still many areas to improve. As we start heading towards mass adoption, things start changing a bit. So automakers start getting much more into the EV topic, and they start achieving, great cost reduction opportunities through economies of scale by rolling out dedicated EV platforms and by, let's say, heavily overhauling their manufacturing operations to make it EV specific. Then at some point, the charging time or charging speed starts becoming more important than range, in the sense that once you have many chargers and located in the right spots, when basically the let's say charging speed is not so relevant, is extremely relevant, then in the end, the need for greater range becomes less. So therefore, the rule of the game in terms of user needs will be more in terms of charging time than outright driving range. And I already mentioned the let's say the EV charger situation. Yes, basically there will have to be many more chargers, but also those chargers will have to be located in places that are in line with the routine of EV drivers, in the sense that in places where they go every day or on a regular basis, where they can basically park the car for some minutes and basically during that time go into something that is compatible with their routine, that doesn't represent a huge disturbance to their routine. At the same time, in this phase, as in the first phase, early adoption, where it was about the EV launch frenzy, a great number of EVs on the market, the focus will shift, let's say at least partially, towards delivering more and better EV services that are actually going to provide to EV drivers much greater convenience and also advantages in terms of total cost of ownership, like, for instance, the ability to use public charging network at low costs, which today still doesn't happen quite often. And after the market basically tackles this phase, heading towards mass adoption, after EVs represent, let's say, or start representing most of the sales in the market, then comes the third phase, which is about tackling niches and regulations. So obviously there will always be more and new regulations for the automotive sector, and this will not be exception for EVs. There will be new regulations coming in terms of battery safety, in terms of energy efficiency, recyclability, and others. And automakers and the technology partners will need to obviously step up the game in order to be able to comply to those regulations effectively. Together with that, we'll also be tackling niches which are still to be conquered by EVs, like, for instance, creating a more involving driving experience, a more involving driving pleasure. Today, EVs are already leading in terms of outright acceleration, especially from standstill, but there's still other aspects of driving pleasure where they still didn't quite make it. And therefore, automakers, technology companies will work specifically in technologies to make sure that EVs will deliver in terms of driving pleasure in all particular areas, especially in comparison with high performance internal combustion engine cars. The aspect of efficiency will continue being extremely important, even on a long term. So therefore, automakers will keep on improving the overall efficiency of their EV platforms, given that this will always be important from a perspective of carbon footprint, and from a perspective of energy expenditure. And at the same time, the companies that at an early phase of the EV ecosystem started developing competitive business models, they will then, on the third phase of EV adoption, be in a condition to reap the benefits from those business models. And this is where we will see those come into fruition from a perspective of business benefit from the companies that took the first move. Now, having into consideration these three different phases, what does that mean in terms of EV market trends? So these are the trends that you should have into consideration for the next 3 years in terms of the EV market. Starting with EV charging network. So the EV charging network will remain as the Achilles heel of EVs. As EV technology improves at a very fast pace, we'll keep on seeing sluggishness from the perspective of governments and also basically the infrastructure providers in terms of delivering the needed infrastructure from a perspective of EV chargers. And as I mentioned earlier, it's not just about the number of chargers, it's about where they are located. Where do they make the most sense in terms of allowing EV drivers to charge their vehicles without this being a huge disturbance to their routine? So this is something where companies involved in the EV space, automakers, technology providers, need to work together in order to overcome the shortcomings of governments, of infrastructure providers, in order to make sure that your customers can have the best possible EV charging experience overall, because this will still be a differentiating factor in comparison to other companies out there. Also, there will be a greater focus on raw material supply chain. So basically, there will be new regulations coming from a perspective of recyclability in terms of increasing the recyclability rate of EV batteries, like, for instance, what will happen in the European Union in 2025. In parallel, we'll see the price of raw materials increasing, as we are already seeing today, due to instabilities like the Russian invasion of Ukraine, like supply chain disruptions. But even that, if these are temporary factors, overall the price of raw materials, will still keep increasing. So therefore, this will put a lot more pressure on the companies in this space to improve the recyclability rate in terms of the sourcing of raw materials, and also basically looking at new technologies from the perspective of mining and raw material processing in order to make sure that the whole supply chain for batteries and electric motors not only becomes more cost effective, but also reduces the carbon footprint and also the overall environmental impact that they would have. Because obviously this is compatible, needs to be consistent with the ethos of electric vehicles. Then there will be still a continued focus on greater vehicle efficiency. So overall, we're still not there in terms of driving range, even that some EVs on the market start getting there. but it's more in terms of mid-range and low-end EVs that the overall driving range needs to increase. And this means that we will keep seeing a big investment, from players out there in terms of improving the efficiency overall of electric motors, of inverters, improving overall energy management, improving aerodynamics, reducing overall weight of the vehicle, and of course, improvement in terms of battery technology. But overall efficiency will keep being, let's say, a game changer for players out there in the EV space. Then basically, something that we are already starting to see now, and we'll see more of this in the next few years, is that legacy automakers will try to boost their share price as a way to try to finance their electrification plan. As we know, the conversion towards 100% EV sales is something very costly. And therefore, obviously, even large legacy automakers need to basically have in place the right financing to achieve that. And obviously, everyone is looking at the success of Tesla and how they managed to boost their share price. Overall, legacy automakers will be looking at ways to use the appeal of their EV ambitions in order to have this as a factor to increase their share price, so that they can, in the end, use this as a factor of financing for their own EVs. As you've seen recently with the split that Ford has announced between their ICE unit and their EV unit. So that's the beginning that we see here, but we'll see more of this coming over, because obviously the aim is, let's say, increasing share price. Also, let's say we will see more and more a major overhaul in terms of vehicle design and manufacturing processes to suit EV-only platforms. So legacy automakers have started with a sort of mixed approach with, let's say, platforms that are sort of hybrid, that basically suit or try to suit both ICE and EV, and therefore producing factories that are not at all optimized for the production of EVs. So it will become clearer and clearer that this approach is not sustainable, because overall it basically leaves these automakers, with huge gaps in comparison to pure players, so EV pure players. So what we'll see more and more is automakers, especially legacy automakers, looking at basically completely redefining their processes and their approaches in terms of vehicle design and in terms of manufacturing, so that this approach can be fully dedicated to EVs, or fully dedicated in leveraging all the benefits, all the opportunities brought by the intrinsic characteristics of EVs. So obviously, let's say everyone is looking at what Tesla is achieving in terms of basically manufacturing costs and speed of manufacturing and others. And we'll see more and more legacy automakers following suit and trying to improve their vehicle design approach and their manufacturing operations towards EV, even because this is absolutely essential in order to be able to implement an aggressive cost reduction roadmap for EVs. Also, let's say the connected car monetization will play a major role in the EV profitability model. So obviously, as many in the sector have already realized, so the traditional cash cow from automakers, which is after sales, it will not have much to give, in a basically automotive sector where most vehicles sold will be EVs, because obviously these vehicles are far less maintenance needs than ICEs. Therefore, it is important to basically redefine the profitability model of automakers, and basically connect the car monetization, meaning sales of digital features and sales of digital services are absolutely essential in order for automakers to recover the revenue lost from traditional after sales. At the moment, many, I might say most automakers struggle with basically generating, let's say, visible profitability from a perspective of their connected car operations. So therefore, many automakers are now in the process of redefining that and giving a new try in terms of, let's say, successfully monetizing connected car. And I say successfully monetizing is obviously monetizing at scale, but like it happens often, some may succeed, some others will not. and therefore this will be a major differentiator amongst auto manufacturers, because those that will succeed at connected car monetization will have a much stronger financial position than those that don't. Also, let's say we will see a move towards building a more customer-centric EV ecosystem. So it goes back to what I mentioned in my previous slide, that in the end, the EV ecosystem is very clunky, not very user-friendly. And definitely there are already many companies that are looking at improving this, looking at ways, especially using digital and using technologies like IoT, like artificial intelligence, to make sure that several different services and features around EV drivers can be made much more customer centric. And because there is such a major gap in terms of customer centricity, once again, the companies that take the lead in this space will have greater chances of being successful on the long run. Also, there will be a progressive split between performance or premium segments and low-cost segments in terms of EV technology. So today, the EV technology agenda has been much more driven by premium segments. And much of this obviously has to do with Tesla, goes without saying. But as EVs start getting more widespread, we'll see a growing split in the sense that as we have, let's say, premium segments where outright performance, driving range, and so forth, are absolutely essential. But as electrification arrives at the lower segments, especially city cars, obviously cost is much more important. And basically other factors like, for instance, charging speed, obviously without a detriment of the current driving range. So this basically opens a lot new possibilities in the sense that some technologies that perhaps would not be feasible for premium EVs, they could be feasible for instance, city-oriented EVs. And last but definitely not least, the risk of fire to become a progressively hot topic, in the sense that obviously even that these are sporadic events, but nevertheless they happen every now and then, and they tend to generate a reasonable amount of press coverage. So as basically it is visible, there's been regulation in China at this respect that has been recently announced. So this is the very beginning. And we'll start seeing more and more focus, especially on the regulatory aspect, in order to make sure that AV occupants and those around them are protected in the event of, let's say, thermal runaway, where basically batteries spontaneously catch fire. So this is something that EV makers and technology companies should be aware of in terms of developing technologies that can cater for these needs in order to minimize the risk of fire of EV batteries. So, and that's all I had to share with you for today. And thank you very much for your attention. Wish you, let's say, a great continuation of your event. And I hope to catch up with you very soon in the future. Take care and goodbye.